just go back to Exxaro. We know where it comes from. It's got substantial assets. It's involved with coal export, major player in the Eskom build-out, because it's got the collieries that are going to be used to supply the new Medupi power station, as well as potentially those in the Middelburg area, which is where Kusile is going up. The question now is, are we looking at it in terms of its price? It peaked up there above 200 Rand a share. It's since fallen back to around the 190 area, I believe. So, it's got a big market cap. It's got a stable shareholder base. Is this one we want to be looking at as a long stock, and over what kind of duration would you say, Ian?
Well, just looking at that price again, you said peaked at around 200, now at around 190. That's not too bad under present circumstances, considering the challenges in the mining industry. I think it's held a reasonable level pretty well. I think that it's got a lot of potential. It's got potential for the export markets. It's got a good transport system ready and waiting. I would really think that this is one to follow.
Let's just also then put on the table what its core assets are. So you've got this operational coal mining and producing company, partly export, partly local. Then you've got a non-managed interest in a heavy minerals business called Tronox, which is now listed on the New York Stock Exchange. Variable profitability. Heavy minerals are what they put into paint and that kind of thing. But it basically flogged its assets to Tronox, and that's been listed. At least you can put a value on that. But then, much more importantly, you've got a 26% stake in the Sishen Iron Ore Company.
Right.
Totally non-managed. That's Anglo-American and Kumba Iron Ore's asset. But basically this company, if you look at their numbers once a year, when they report them every 6 months, you see this enormous number, which is the profits from Sishen. And we know that iron ore has been a great asset to have. It's been upgrading its production at Sishen mine and exporting it via that line down to Saldanha. So the cash flows there, you comfortable that the iron ore thing is going to continue to kick in big numbers?
Yes, I think it's a matter of time again. I think we just look always at China, India as a big market for iron ore, but there's the rest of the world. And I do think, considering where they're placed, they may find in due course Europe or other areas where they could profitably cope with the cost of transport, which is a challenge to them. Now, I can see no reason not to believe that it has a really good future in that combination of coal and iron ore. Iron ore is going to be tied to the future regeneration of industrial production in the world. It will happen. It's a matter of time. One may need a bit of patience, but it's not unduly expensive right now.
So, Paul, not being unduly expensive, would you be getting in?
Yeah, I think so. Look, I mean, the fact is the price I just checked is about 173. So it's been as high as 215. So that's quite a big slip.
Yes.
But I am seeing articles in the last few days in the global media, market media, about how China maybe has been showing signs that there are a couple of green shoots there. So a lot of people, I think the market consensus has been that China was sort of slowing down. Look, they can only manage 7.5%. What a bunch of losers. But now suddenly people are like saying, well, maybe that's not so bad, and maybe actually we've been too glum. So I think if you were to get into this one at these kinds of levels, the catalyst for the trade would obviously be some better sentiment out there about the China and the China store and the China economy.